Hello and welcome everybody to today's live stream Thursday already. That's bizarre to me. I'm Carl Peterson, Credit Suite's content and social media lead. So nice to be here with everybody today. Today we are diving into how to avoid missing out on business opportunities due to a lack of capital. This is a situation that so many businesses face, like so many, most businesses face at some point, honestly, especially when they're growing rapidly or dealing with any kind of unexpected challenges. It's not really exclusive to only rapid growing businesses or companies dealing with unexpected challenges, of course, but we see that the most often with those types of businesses. This is a struggle that is very wide range, though, for business owners that they unfortunately have to face head on at most likely some point in their business's lifespan. But of course, with the right strategies and the right mindset, you can absolutely ensure that your business is always ready to seize opportunities when they arise. But before we get into anything regarding that and all the things I have for you today, I want to give some shout outs right here, right now. So if you're hanging out in chat, drop your business name and where you're located, no strings attached. I literally just love knowing where everyone is from that comes in. And the cool part is when this is a VOD after the live ends, it's posted and the shout outs included. So pretty cool to me. Let me know in chat right now. I'll keep an eye on it. Like Mike South over on YouTube. Nice to see you, Mike. Hello from STL. Mike is in every one of these streams, and it is so great to see you. You've become a part of these live streams now at this point. So nice to see you, Mike. Mike has gotten pretty much hundreds of free shout outs at this point. Nice to see you, Mike. Thanks for being here. And hope you're having a good Thursday. So let's start by starting with why capital is so important, right? So capital is the fuel that drives your business forward. It is the very thing that allows you to invest in new products. It's the very thing that allows you to hire additional staff and upgrade your equipment and take on just overall advantages of growth opportunities when they arise. And as a business owner, it's super obvious to you probably that without that capital, you may find yourself having to, whether you want to or not, turn down these lucrative opportunities of new customers or just new cash flow opportunities, which can absolutely hurt your business in the today's situation and obviously in the long run as well. So here's some common scenarios where that lack of capital really hurts business owners. Again, we're talking about all business owners. We're not just talking about startups. We're not just talking about unexpected situations coming up. We're talking about businesses across the board. But again, those first two, a little bit more relatable in this situation. So imagine needing to fulfill a really large order, but not having the funds to purchase the necessary materials, or spotting a really perfect location that would be great for your business to expand into, but not having the capital to secure it. These are just the kinds of opportunities you don't really want to miss out on. And also some of these opportunities just pop up randomly for you. They're not really, you don't have a date sometimes, April 5th, 2025, this location will be available. Sometimes you have that, sure, but not all the time. So you have to be prepared when it's time to actually take action and directly benefit from it, whether you know that is coming or whether it's tomorrow randomly. And sometimes in business, a lot of things are tomorrow randomly. You guys know that. So let's talk about actually accessing your capital needs. By the way, if you're just coming in a chat, drop a hello. I'll give you a shout out. Tell me where you're from, what your business name is. I'll give you a shout out right here, just like Mike South. So the first step is in avoiding missed opportunities is actually understanding your business's capital needs. This means actually taking a very close look at your current operations and future plans and any kind of potential opportunities that you think may be coming up in the near future or even the far future, right? It's okay to plan that far in advance too. So you want to always conduct a thorough assessment of your cash flow and current financial commitments and any kind of upcoming expenses that you know about or that you may be expecting. And this will give you a really clear picture of how much capital you might need to actually maintain operations and take advantage of those new opportunities. And during all of this, you got to make sure that you're being realistic, right? So when you're laying all of this out, sure, you want your business to hit 1 million in sales by the end of the year, but how realistic is that actually? Like, real honest truth to yourself, 100%. How real is that? Remember, you have to be going into these situations with realistic expectations now during the planning process so that it doesn't hold you back later on, especially when it actually really, really matters. Beyond assessing your current needs, it's also crucial to forecast your future capital requirements as well. So consider scenarios like seasonal sales spike, for example, or unexpected equipment failures or potential new market expansions. Using financial modeling tools or just simply working with a financial advisor can obviously help you project these needs a little bit more accurately. And just like I said a second ago, make sure that you're staying as realistic as you possibly can. You have to be making these decisions very informed based off of facts, not wants and dreams. And you have to be real honest with yourself to make sure that you're differentiating the two correctly. It's also wise to set aside a capital reserve. So this is an emergency fund, if you will, that can help you weather unexpected expenses or seize any kind of sudden opportunities that come up. I'm not a financial advisor by any means, but what you typically see online as kind of a good rule of thumb is to have enough capital reserve to cover at least 3 to 6 months of operating expenses. Again, not a financial advisor whatsoever, but when you search these things online, that's typically the time span that you see when you're trying to figure out how much you need to have aside. And this is exactly where business credit can come into play, which we'll be touching on a little bit more in detail in just a few seconds. So, one of the most important steps of avoiding any kind of opportunities being missed out on when you actually need it, one is most common business ways possible, or excuse me, one of the most common ways for businesses is through traditional financing options like bank loans or lines of credit or business credit cards, for example. These are options that can provide you with the necessary funds you need, but it's also important to understand the terms and rates associated with them as well. And then on top of that, it's also important to account for those types of things in that initial planning process. Traditional financing just isn't the right option for you for whatever reason, I have excellent news for you. It's not a dead end. There are plenty of alternative financing methods to consider, such as factoring or crowdfunding, or just seeking out investors, or even bootstrapping through friends and family. Each of these options obviously comes with its own set of advantages and disadvantages, just like practically anything and everything in the world of funding and business. So it's important to obviously very carefully weigh them out, the pros and cons before making any kind of decision. And remember that decision you make today absolutely affects your business much further down the road. So fully understanding those pros and cons while searching for what actually fits your business the best and its needs the best can really, really pay off again and again and again and again down the road. For instance, invoice factoring can provide a really quick access to cash, but might involve higher fees. Crowdfunding can generate interest and capital simultaneously, but it also requires a really compelling campaign to actually reach the most success that you can get to. So before we move on, I have to tell you about something. It's one of my favorite credit suite guides ever. It covers 27 different types of funding for your business. It deep dives into some of the most common types of funding all the way to alternative fundings, things that you may have never heard of before. So, like I said, this is one of my favorite guides, and it's because it doesn't only offer a ridiculous amount of information, but it also opens up the horizons a little bit more for you, and it gives you a little bit more of an opportunity to actually discover a financing route that may have not even known about before. And that's exactly what you may have needed. And that's really exciting to me. So you can download that guide for free at creditsuite.com/27. That's the number 27. It's completely free to download, and viewing it will be delivered to your email in literally just a minute. A link just dropped in chat. You can simply just click that and get started. You don't want to miss out on that whatsoever. Again, that's creditsuite.com/2727, or just click that link that was just dropped in chat. So another idea to use for avoiding opportunities is establishing strong relationships with banks and financial institutions or lenders. So this can be very beneficial in securing capital when you need it. Keep them updated on your business's progress, and actually maintain a good credit standing to improve your chances of getting approved for loans or credit lines. That sounds obvious, right? And this may sound basic. I get it, but don't dismiss it. If having an open communication with them could help you get way more money for your business and way better terms, then why wouldn't you? I told you a second ago we're going to be covering business credit, and that's what we're doing right now. So make sure you're paying attention. This part is beyond crucial for you to know. So the term, if you're brand new to business credit, the simplest and fastest way to explain what that is it's kind of similar to personal credit, but it's specifically to your business. That the main point is to accurately reflect your company's ability to borrow money and pay it back versus you, the owner's ability. But it's also how you, the business owner, is able to completely detach your personal credit and your finances from the business without having to dip into cash flow or slow down operations along the way in any kind of area. So having a strong business credit can score can absolutely make it way easier to secure loans and lease equipment, or even negotiate better terms with suppliers. You want to start this process by simply just applying for a business credit card or line of credit, and you got to make sure that payments on time, because this is one of the most important thing that kind of supercharges your business credit score. And the better of the business credit score typically means the more money you can get your hands on and have access to. And once you've built a strong business credit portfolio, then you can actually start using it to your advantage. This might mean accessing a line of credit to fund a new project, or expanding your inventory to meet some sort of sudden urge in demand and surge in demand rather. And this also may mean having direct access to funds as a safety net, which is huge. There's a billion and 12 reasons why having business credit is a must for all businesses of all sizes. And of course, it's also important when doing all of these things to regularly monitor your business credit report to actually ensure that it's accurate and that it's showing those payment histories correctly and utilization correctly. This also allows you to make sure that you're on top of incorrect data that is negatively impacting your ability to secure funding. This is something that you may not even know is actually getting you declined, unless it's one of those things where, like, I don't really love the saying, but if you don't know, you don't know, right? It's one of those things. If you don't know that these things are on your credit report, then you're going to keep getting declined, not even knowing that that's an easy fix and a mistake on their part. So you always want to make sure that you're on top of getting on that incorrect data fixed. And it's also important to stay aware of common pitfalls when managing business credit, such as kind of overextending your credit lines or failing to keep personal and business finances separate. Keeping these areas in check will absolutely help you not only maintain a strong business portfolio, but also will get you way better funding options, way easier. So listen, as a business owner and an entrepreneur, I'm going to assume that you have all the main traits of what it takes to actually do that job. And there's a long list, as you know. So one of those traits is agility, right? And just like you have to have agility when making day-to-day decisions in your business, you should absolutely start doing the exact same thing, if you're not yet, when it comes to managing your business's finances. So here's some starting strategies that you have to keep in mind. First and foremost, maintaining cash flow. So a healthy cash flow is absolutely essential for business finance agility. This means ensuring that you're actually, your receivables are collected in a timely manner, and that your payables are managed effectively. Second is just diversifying income streams. So this could involve expanding your product line or entering new markets or even offering subscription based services if that's relevant to your specific business and customer base. Diversification can provide a very steady flow of income, reducing your dependency on just a single revenue source. And this can be looked at as kind of a safety net if you want to, in many ways, and all while helping you, get the power back, which should allow no missed opportunities directly because of cash flow issues or lack of capital in general. Next is just making sure you're informed and adapting, right? So the business landscape is constantly changing, pretty much like every day, it feels like. So staying informed about industry trends that are specific to you and economic conditions is obviously extremely crucial. And adaptability is key. So being able to kind of pivot your business model or adjust your financial strategies in response to those market shifts can obviously very much help you avoid those potential pitfalls and capitalize on that new opportunity. So, today we have we've covered the importance of capital in business, how to access your capital needs, different ways to access and manage that capital, and the role of business credit in actually seizing those opportunities. We're also explore strategies for maintaining financial agility to ensure that your business can adapt and thrive in practically any kind of economic climate. Listen, you got to remember this: staying proactive and planning ahead are key to ensuring that your business is always ready to grow and capitalize on those new opportunities. I'm going to be honest with you right here, right now. Everything that I mentioned today is overall pretty surface level, right? And we only have a couple minutes together during these streams, so it would take an entire day and a half diving into every little tiny detail and specific to help you actually avoid missing opportunities for your business because of that lack of capital. We just don't have the time. But here's the good news: this information can all be a solid starting point for you. But an even better one is at creditsuite.com forward slash consult. Creditsuite.com forward slash consult. It literally takes you a couple seconds to just fill out a form, and our team of experts will be reaching back out to you literally as soon as they possibly can. And even better news is that this is entirely a free consultation that we're providing you. In business, absolutely nothing is a one size fits all. We know that, and you likely do too, right? So, even if everything we've covered today is a very solid starting point, if you want to take an actual first step towards a financial well being, this is a free consultation and a really great answer for you. So, on this call, we can actually take time to discuss your wants and needs and any struggles that you may be having in your business. And we'll actually see what we can do to get those actionable game plan items in place for you. That again is creditsuite.com forward slash consult. A link was just dropped in chat. You can click that, fill out a form. It takes 60 seconds, or you can give us a call at 727-617-7803. So if you found today's live stream valuable, please don't forget to like and subscribe to the channel that you're watching on for way more insights and tips on growing your business and business credit. We post pretty much daily, and we have these live streams typically twice a week. So don't miss out on a massive amount of knowledge in your news feed every day. Additionally, if you missed anything during this stream or simply just want to go back and watch something again, as soon as this ends, count to about 60 seconds and reload the page. You'll be able to watch this entire stream in its entirety again. So with that being said, I hope you all have a wonderful and successful rest of your week. Thanks for spending some time with us today, and we'll see you again, same time, same place on